My name is Alan Greenstein. I'm the co-founder of Zaga. I'm going to explain to you what Zaga is, what we do, and why you should be talking to us if you're interested in alternative investment, especially in the commercial real estate debt space. Zaga is a boutique investment manager and commercial real estate non-bank lender. What does that mean in the simplest of terms? Effectively, we look to harness investment power to convert the money that you hold in the bank, especially as an SMSF trustee or an SMSF investor, and to give you a strong return on that money without a commensurate increase in risk. And on the lending side, we look to help borrowers, credible borrowers with credible projects, to get an alternative means of financing for their money. From an investment point of view, we are for sophisticated or wholesale investors only. From a regulatory point of view, I think you'll all agree with me that the regulator still treats a self-managed super fund trustee as wholesale, but outside of that, you need to be a sophisticated or wholesale investor and meet that test. And as a result of that, our structure and our products are well suited to SMSF investors, and we'd love to have that conversation with you. Our investors are largely drawn from private or very small institutional investors, and on the borrower side, we tend to deal with individuals or private companies, all of whom are good clients of banks, but who for whatever reason are not having their needs met by the bank. As I said just a little while ago, we focus on commercial real estate debt. What really is commercial real estate debt? That is lending into projects which are secured by some form of commercial real estate. It could be residential, it could be industrial, it could be commercial, it could be a special purpose asset, but at the end of the day, we are not funding the end user or the end owner. So we're not offering mortgage finance or finance to the ultimate user, we're offering finance to the developer of the project generally. Where we're not looking at a development project, we're also able to offer other forms of finance, business finance, buyout finance, certain kinds of leverage or cash flow financing, as long as we can take a registered first mortgage over property security. Our transactions generally range between $4 million and $50 million, and I'll explain why that is. And we operate across the eastern seaboard of Australia, generally, mostly in New South Wales, less so in Victoria, and then less so in some of the other areas. We generally tend to stay away from Western Australia and Northern Territories. A, we just don't know those markets, and B, they're very hard for us to get to. We like to be close to the assets that we fund. So that's just a little about cred and the market we're in. And just to give you a sense of the journey so far, Zaga started in 2017. We wrote our first loan in June 2017. We've written well over $1.7 billion worth of loans since then, well over 250 loans, all at an average of less than 65% LVR. And as I said, across the eastern seaboard, the average loan size right now in the last 12 months is around $11 to $12 million, but historically it's a little bit less than that. Since starting the journey in 2017, we wrote our first loan in June 2017, so we're coming up for our 7th birthday pretty soon. The journey has really taken us along an interesting path. We started as a peer-to-peer lender, or a marketplace lender as they're often called. We've developed away from that into more of a classic non-bank lender. We have a number of funds through which you can invest. These are open-ended private vehicles. We also have a unitized fund, as well as the opportunity to invest directly in loans. We set up our first fund, the Zaga Feeder Fund, in around 2019. That has well over $100 million in it now. We issued a corporate note, $48 million corporate note on the market a couple of years ago. So we have investors through that who are retail investors, but brought to us through a third party. So that opportunity, I'm afraid, is not open anymore until we issue another corporate note. That will depend on how market circumstances look going forward. We recently opened an office in Singapore. We have a Singapore VCC sub-fund operating, so if you have any clients or interested investors from Singapore, they get an interesting tax-free opportunity to invest in the vehicle if that's what they want. We have about 23 team members across the world right now, the majority based in Sydney, but some in Manila, some in Singapore, and some in New Zealand. We have investors from all over the world, the US, the UK, South Africa, Hong Kong, China, Singapore, obviously, I've already mentioned that. Obviously, a lot from Australia, also from Mauritius, the Channel Islands, Switzerland and places like that. So we're fully FATCA operative, we do CRS, we do all of the regulatory checks and balances, we are licensed for AML/CTF, we are licensed as a lender, and we are licensed as an investment manager. So that should give you a sense of who Zaga is, the journey we've come along to date, and the opportunity that exists going forward. So what do we really do from a credit point of view? Let me speak about this in two contexts. Firstly, as an investor, and then as a borrower. From an investor point of view, we are interested in the money that you have in the bank. We're not really interested in the part of your portfolio that is in equities or in private equity or venture capital or any of those things. We are an alternative investment manager, and we would like to give you a better return on your cash in the bank than you are currently getting right now. Now, we all know well that returns in the bank have gone up significantly in the past couple of years if interest rates have gone up, but these are not to say that they're the best returns available, and we are currently offering returns in excess of 9%, depending on the level of risk you want to take, but all secured by first mortgage at less than 65% LVR. So from an investment point of view, if you're looking to hedge against inflation, if you're looking for something that is non-correlated to the volatility of equities markets, if you're looking for something that is going to generate you consistent cash and is generally a good hedge and protection for your investment, then this kind of alternative investment is probably good for you. So what we're really doing is we are taking your money, we're using your money to fund commercial real estate debt, and we are paying you a return on that money, either on a monthly basis or a quarterly basis or on an annual basis, largely as you choose. And you can invest that through any one of a number of vehicles, directly into the underlying loans, through our private fund, which is non-unitized, or through our funds which are unitized and which are available through a number of platforms. So from an investment point of view, if you're a self-managed super fund trustee or a self-managed super fund advisor, and you're looking into private credit, and we know that private credit is kind of the name of the game these days, and you're looking to get into that market, then we would say that our product and our structure is a good way to do that, and I'll talk about that a little bit more. From a borrower's point of view, we all understand how inflexible and how difficult it is to work with the banks. We're certainly not knocking the banks, they're just really big beasts, and it's very, very hard to maneuver a large ship. So we are more flexible than the banks, we're a little bit more commercial than the banks, more entrepreneurial, but it's not to say that we cut any corners. We are certainly not lenders of last resort, and we certainly lend money to borrowers who are A-grade borrowers of the banks. We're able to do this a little bit faster for them and maybe with a bit more flexibility, and that's why they're prepared to come to somebody like Zaga and pay a little bit more for their money. Remember that to a developer, time is money, so the 6 or 7 months that it takes for them to get their approval from the bank, they could already be digging in the ground, getting their project up and out, and in relative terms, you could be talking the cost of a kitchen or the cost of a bathroom in terms of the extra cost that they have to fund from an interest rate point of view. So we like to think of this as a very symbiotic relationship, money that is earning a much stronger return, being invested into very strong assets with credible counterparties, secured by first mortgages and additional personal guarantees, and that really makes for a good relationship going forward. One of the big questions we're always asked around it is the question of managing the risk. Is it not risky? We're all reading about builders collapsing and those kinds of things. And I said earlier I would come back to the 4 to 50 million comment that I made. Well, this is where we think we have the edge. We like to believe that if we're going to get into a deal, we need to know how we're going to exit from the deal in order to be able to get into it. And one of the key points of exit is the due diligence. And as part of our due diligence, we want to understand who all the counterparties are and what they're going to be doing. Now, from a construction point of view, if one is funding a construction loan, you want to make sure that if one of your counterparties, the builder, the quantity surveyor, any one of those goes out of business for whatever reason, you want to be able to easily replace them. And we believe that in the market in which we operate, it is much easier to find alternative and equally good providers. Whereas the larger the loan size is, the bigger the loan is, the more complicated it is, the harder that becomes. We also don't like to lend for longer than 24 months. We like to try and get out within the same economic cycle. That creates certainty for our investors and also certainty for our borrowers. But just in terms of managing the risk, if you are thinking of getting into the space, You need to be very comfortable that you've gone with an investment manager that is licensed, that has credibility, that has a good track record, that has expertise, that has experience. And if you have a look at our capability statement, or if you go onto our website, I think you will be able to see when you read our documentation that we're able to tick all of those boxes. From a builder point of view, as I explained to you, it's important that your funder or your investment manager does a decent due diligence, and we believe we are well qualified to do that. And when it comes to location risk, it's not only about where the property is situated. You can't just invest because you like the postcode. You have to make sure that all of the pieces add up, and at the end of the day, the jigsaw puzzle is going to be completed in the way that it should. So based on our track record, based on the fact that we've been around now for 7 years, that we've done $1.8 billion just about of lending across 250 loans with a team of 23 people, we would like to believe that Zaga is somebody you should talk to if you're interested in this. So just to sum up, we're a non-bank lender and private client alternative asset manager. We take money from sophisticated clients, including self-managed super fund trustees. We try to give you an excellent return on your money, currently over 9%. We offer you a number of alternatives. We would like to believe that we're of the best out there in the market that we operate in. And obviously we have lots and lots of competitors, but we're not all in the same market, and it's got to be an apples with apples comparison. So I'd like to be bold enough to say that we would consider ourselves to be of the best. And if you're interested, please get in touch with us through our social media or through our website. We'd love to have a conversation with you. And just to leave you with this thought, why zig when you can Zaga?